All right, boys. Today, we're going to be breaking down how we can find daily bias. And I've made like several different videos on this, and each video is a different way to find daily bias. And just like all of my videos, this is just brain dump to you guys to help you guys find what works, okay? So again, not every strategy is going to work for everybody. If every strategy worked for every single person, then everybody would be profitable. And that's just not the case. So what I want to do today with you guys is break down how I've been finding daily bias as of recently. And obviously all of my daily bias videos in the past was how I was using daily bias to find it at that time. And it still fucking works. If you guys use it and it works for you, awesome. Keep using it. But this is just a updated video on how I find my daily bias. It's relatively simple, and it's using premium and discount. And a lot of you guys who've been tapping into the kick streams have been asking like, hey, how are you doing this? So I figured, why not make a video on this? And if you guys aren't tapping into the kick streams, tap the fuck in. They happen every single morning at 9 a.m. Eastern time. I know I took a little break last week from it, but we're back in business, streaming every single day for you guys, because at this point in time, I'm probably back in Puerto Rico for you guys. So with that being said, let's get it started. Alrighty, so let's get it started. So let's just jump right into this. So first thing that I want to explain is how I use premium and discount to help find daily bias. You know, most of the time I kind of sit here and give you guys a little explanation before we actually go into the chart work of it. So as of recently, what has been helping me a lot has been identifying whether we are in a premium or a discounted price range. And if we're in a discounted price range, cool, I can go along with the current overall daily bias that I have using the previous daily bias strategy that I had. And if you guys don't know that, watch the Trading Transformation. I'll leave a little link in the description for you guys to watch that. But I pretty much determine, hey, if we're in a premium, then I'll flip my daily bias and pretty much make the overall target the equilibrium level. So if you guys don't know how to find equilibrium, watch the bootcamp videos on that and watch the Trading Transformation videos on that. Those playlists are like my staples for like these upcoming videos that I'm giving to you guys. I kind of want to put a name on this little thing like Sniper Series or something stupid, but whatever. These are just overall informative videos where I'm kind of grabbing concepts from the Trading Transformation and the bootcamp and combining them together and making just overall videos on how you guys can start putting some of these confluences together. But if you guys want just like the bare bones, watch those first, and then we can get into it. So with that being said, we already know equilibrium, right? When we're in an uptrend, we draw it from the lows up to the highs, right? So let's say this is a low, and this is the high. Okay, we want price to come down to this line because this is the equilibrium level. Everything above this level is a premium, and everything below this level is a discount. So with that in mind, let's say we're in a current uptrend, right? As you guys know, my previous finding daily bias strategy was like, if we're in an uptrend on the 4 hour and then like the 1 hour, we're looking for buys only. But that has slightly changed because it's limited the amount of trades that I've been able to take, and this has helped me extend that so I'm actually able to take trades whether we're in an uptrend or a downtrend, and in the opposite direction. So let's say we're in an uptrend on the 4 hour, but price is within a premium, or is within a premium, right? We want to see price push down into a discounted price range before price can actually keep going higher and higher. Okay, so let's say this is market open right here, and we're in a premium price range. I'm going to want to see price go lower down towards that discounted price range on the high time frame for us to be able to continue that uptrend. Now, let's take this back a little bit more. Let's say price is right here, and this is market open. Cool, we're still in an uptrend, and I'm seeing that, hey, we're at a discounted price level, so more often than not, we're in an uptrend and we're at a discounted price level, so I want to see price move higher. And that's really the only thing that I've added to me finding daily bias as of recently, and it's been helping a lot. Okay, so Let's go ahead and find an example of this. This is a perfect example right here. Okay, and we went over this in the past week's market recap. So this was July 2024, July 1st. Okay, stupid. July 1st, we see a break of structure to the upside on the 4-hour time frame. Okay, let's go in here and mark out market open really quick. Come on, bro. My computer's been lagging a bit recently, and that's not very typical of this computer out here in Miami. It's usually pretty solid. Okay, so you're probably saying, hey, we broke structure back to the upside, or back to the downside on this candle. That is true. However, after that, we got another break of structure back to the upside. Okay, so first of all, let's just say we're looking just at this, right? We see that we broke structure to the upside. We're in an uptrend. What are we looking for? Equilibrium to get hit. What happens? Equilibrium gets hit, price ends up moving higher. On top of that, how can we even more so use this to our advantage? We can look at this range. So overall, on the super high time frame, what are we in? We're in an uptrend. Okay? We can identify these as range lows and these as range highs. Right? This is a pretty significant low. This is a pretty significant high. We end up breaking 4-hour structure to the downside. So we can kind of assume, hey, this is probably a daily retrace. So with that in mind, what can we do? We can take this from these range lows up to these range highs, and we can see, okay, price made a low, we made a high, we push into equilibrium, perfect. I can look for, like my overall daily bias is going to be long because we pushed into equilibrium on daily time frame off of a daily retrace. And then on top of that, we get a 4-hour break of structure to the upside. Now, if we want to scale, we can now say like these hourly range lows up to these hourly range highs after the hourly break in structure back to the downside, because now this is probably going to be a 4-hour retrace. We retrace down into equilibrium. So what can we be looking for this day? Longs. Price goes higher. Okay, let's show another example of this. Let's show an example where price has already made an extension and we're looking for a retrace. Let's see if we have one here. No, this is after we already got a break. There was some pretty decent ones down over here. Do I remember this? Oh, this one's a good one, I believe. Yeah, this one's an awesome one. Okay, here we go. Fuck, if I can remember when that was. Right here, I think. Yeah. I caught a fire-ass trade off of this. Where was market open? Okay, so let's bring this back to the 4-hour. Okay, so if we want to get like extremely analytical with the shits, you know, we could say like, oh, like trying to identify the overall range lows or range highs, but for the most part, I'm never really looking at the daily time frame. I'm mainly just trying to look at the 4-hour time frame because that's really as high as I want to go in terms of trying to find overall daily bias. So this is a perfect example of us being bullish for the day, but I ended up taking a bearish trade. Okay, so we can see here that we break 4-hour structure on this most recent candle, right? On this most recent 4-hour candle. What we haven't done, though, is we've made the extension. So this is another thing I want to mention, right? So let's say we're in an uptrend. Every single leg up is an extension. When I see an extension up, we pretty much always have to assume that we are going to be due for a retrace down to fill equilibrium. Almost always, price will always be trying to seek out an equilibrium level before moving up and higher. Okay? Almost always. So with that in mind, right, if we are moving like this and we see boom extension and we're at the top of an extension and we start seeing bearish signs on lower time frames that price is going to start moving lower, where can we safely assume that price is going to want to go? Towards equilibrium. And that's how we can help find a bearish daily bias within bullish market structure. So this is a perfect example. We're in bullish market structure, but look at this. We made an extension. On top of that, if we scale in, we see, oh, price swept out these highs right here. That's like boom, bear fucking foundations of the TJR strategy. We see price sweep liquidity. So what can we be looking for price to hit? Equilibrium. Okay, so we take it from these range lows up to these hourly range highs, right? How do we know it's the hourly range highs? Because we start breaking structure to the downside. And look how it perfectly fills equilibrium. Okay, and then on top of that, we also have this big ass imbalance. Okay, and that can be used in our favor to say, hey, imbalanced price action needs to be balanced out. So we see boom from these range lows up to these range highs. Cool, how can we scale down more so? Let's get down and dirty. Okay, we see boom, sweep of liquidity right when market opens. Okay, from there, let's see if we can see anything. Boom, we get a break of structure to the downside on the 15-minute right here. Awesome, we can scale down even lower. I don't know if the 5-minute or the 1-minute will let me get all the way over here. 5-minute, I think it will. Cool. I don't think the 1-minute will let me go all the way over there. Okay, we get a break of structure on the 15-minute. Okay, we come up, we fill in this imbalance. Guarantee you there is some sort of 1 hour confluences, or sorry, 1 minute confluences within here to give us that overall bias for price to end up wanting to seek out equilibrium. So that's a perfect example of when we are in an uptrend. We've already made the extension, but we haven't made the retracement. And how do we know that there's going to be a retracement? When we start seeing confluences like this, when we see sweep of liquidity, when we see like 15-minute break of structure. And again, this is just using my strategy. What do we know about price? Price is fractal, okay? So we know that we can use these confluences on really any time frame, right? If we're within a daily extension and we start seeing 4-hour capitulation to the downside, and we're in an uptrend on the daily, we can safely assume that the 4-hour capitulation is going to go towards daily equilibrium. It's the same thing that we did here. The 4-hour is in an uptrend. We see 1 hour sweep and we start to see 1 hour capitulation. What can we safely assume about what's going to happen? 4-hour equilibrium is going to be hit. Okay, and then we can even do this more so to the very next one. Okay, so let's go back to wherever we were. Right here. Okay, so boom, this was this day. And then moving forward, boom, this is the next day. Oh, bro, those past 2 trading days were fucking beautiful for this. And I'm glad I remembered this. We'll just slap that on. Another example here. Extension, we see bearish attributes on the hourly. Where do we want price to go? 4-hour equilibrium. Now, if we go back to the 4-hour, sorry, I'm jumping all around. If we go back to the 4-hour, we're still in bullish market structure. We haven't broken 4-hour structure to the downside. What do we see? Okay, we see a 4-hour extension up, and then we start seeing price go down. This is during pre-market. So what can we do? Find 4-hour equilibrium. 4-hour equilibrium is already hit during pre-market. We go into the hourly. We can see, oh wow, equilibrium was already hit. So we're in an uptrend. We're in a discounted price range. What does that give us the opportunity to do? Look for longs. Craziness. Okay, so from there, we can scale into the 15-minute. I don't necessarily need to go through like a full-on execution, but okay, we get into the discounted price range. We see price, boom, rip down. We end up getting, I'm pretty sure there was SMT divergence off of these lows right here and these lows on, because these were higher lows, and I'm pretty sure on ES we actually got a sweep. Well, I actually know this for a fact because I traded this. If you guys go back to my trading day, we could literally watch my trading recap of June 4th on YouTube right now, I want you guys to pause the video and go back to the June 4th trade recap video and tell me that I didn't explain this exactly how I did in this video. Everyone do that right now, and then come back and tell me that I didn't get it on the dot. Matter of fact, I'm literally going to go to ES right now, to June 4th. This will be so embarrassing if I'm wrong about this, but I'd be having like photographic memory sometimes. Where's June 4th? Ah! Wait, that's the 5th. God damn it. Where's the 4th? Please be right. June 4th. I was right. Sweep of liquidity on the 15-minute SMT divergence. Talk about market experience, man. I'm all over the place with this shit. Boom. NQ made SMT divergence. ES is the lagging index. We see sweep of liquidity. Price moves higher. Same situation here. Range low, range high, equilibrium gets filled. Sweep of liquidity. Long John bomb that shit, man. To the fucking end zone. So boom. That explains how I use premium and discount with my current daily bias strategy, just using the 4-hour and 1-hour trends to help identify when we're in an uptrend on the 4-hour, but we can still technically look for shorts when we're within a premium price range. And then if we're in a discounted price range, we're still going to be looking for longs. Cool? Cool. Hopefully you guys learned a little something from this. I love and appreciate you guys. I'm going to keep ripping out these videos for you guys. I've been literally sitting in here for the past like hour and a half just ripping YouTube videos because I love y'all, okay? And I want to help you guys become better fucking traders. And I know I was lacking for honestly a decent amount of time, man. Let's get real. I was lacking for a decent amount of time. I wasn't making good fucking YouTube videos, but we're back on my bullshit. Okay, I'm back trying to make you guys the best fucking traders ever because I know what this did for my life and I know what it can do for yours. We're back on our shit, man. Okay? So let's keep these YouTube videos up. Let's keep learning how to become good fucking traders. Let's keep learning how to accurately predict price action, and let's keep kicking the fucking banks in the ass. I love and appreciate you boys. If you guys haven't liked already, like the fucking video. If you guys haven't subbed already, subscribe. Road to 500K. Let's fucking go.